Welcome to the College Investor Audio Show, where we talk about the biggest issues impacting millennial money, from student loan debt to side hustles to building wealth. We will show you how to get out of debt so that you can build real wealth for the future.
A new year, yay! Usually means new tax changes to keep in mind for filers. Yay? But parents need to be especially watchful of the tax changes affecting their families this year. The advanced child tax credit and other changes will significantly impact returns filed by parents. We partnered with our good friends at TaxSlayer to explore what parents need to know about filing their taxes in 2022. How do big changes like the child tax credit impact things? And how can TaxSlayer help you file your tax return quickly and easily? And probably at the best price, too. 3 tax changes affecting parents this year. Let's get right to it. America's taxpayers typically navigate through a certain number of tax law changes every single year. We're used to it. The year 2021 brought major changes to the child tax credit, among others. As a result, parents with children are most likely to feel the biggest impact when they go to file their returns in 2022. If you're a parent claiming dependents, here's what you need to know before you start preparing your return. Advanced child tax credit. So, if you have dependents under 17, under the new law, you could be eligible for a tax credit of up to $3,600 per year per child, 0 to 5, and then $3,000 for each child 6 to 17. The credit is fully refundable this year, which means you could receive some or all of that amount back in your refund. Not surprisingly, that could make a big impact on any family budget. Whew. Here's a quick note for you. You might have received a portion of the advanced child tax credit in 2021. Maybe you got some monthly installments from the IRS. I got a few checks. Now, the IRS began delivering these payments to eligible families in July, unless you opted out and continued distributing them through December. You need to reconcile your payments on your 21 tax return. So it's important to note that you're going to need to report any amount of tax credit you received on your 2021 tax return. If you didn't receive any, or you purposely opted out, you may receive a bigger refund in 22 because the credit is fully refundable. If, on the other hand, you did receive the advance payments, you could see a lower than expected refund in 22. Finally, if you received tax credit payments in error, you might need to pay those back. Okay, the might is not there. You will need to pay back a portion, or maybe even all of the credit. So this may all sound really confusing, but fortunately, we have TaxSlayer that makes it easy to determine if you're eligible for the child tax credit. When you go to file your return, simply follow TaxSlayer's step-by-step guidance to enter your info and claim the amount you deserve. Possibility of no child tax credits in 2022. It's also important to remember that the advanced child tax credit was only for 2021. As of December 2021, extending the credit is sitting on Capitol Hill without the votes needed to pass the Build Back Better spending bill. If the child tax credit doesn't pass for 2022, that means parents would stop receiving advanced tax credit payments starting in January 2022. If you are counting on the funds from the child tax credit payments, then you will need to make changes to your budget today. Although things may change, it's highly possible that the child tax credit won't be in effect for 2022. Stimulus payments. So here's another important reminder for families. Don't forget to claim any missing recovery rebate payments, stimulus checks. If you were eligible for the third payment and never got it, or you received less than you were eligible for, then you need to file a tax return to claim what you're owed. This is true even if you're not typically required to file a return. TaxSlayer will walk you through entering the information you need, including how much, if any, stimulus payments you received during 2021. You can also find this information on IRS Form 1444C that should have been mailed to you. Now let's take a look at the tax status and bracket changes. Yeah, every year the brackets change a little bit to account for inflation. If your filing status has changed this year, your tax return will be impacted. The IRS sets different income thresholds for taxes based on your filing status. If you change your filing status, you may see a change in your taxation based on your income. So, for example, let's say that last year you filed a single tax return with an income of $39,000, making your tax rate 12%. But this year you got married and filed a joint tax return with your spouse with a combined income of $100,000. Cha-ching! This year, your tax rate would be 22%. Oh, with that, you may significantly increase your tax liabilities. So here's the bottom line. There are always a lot of changes with taxes every single year, but the biggest being the child tax credit for this year. And it can be confusing to navigate, especially for busy parents like me. So you should consider using TaxSlayer to kind of streamline your tax filing process as you navigate all these changes. With the help of TaxSlayer, you can make sure to capitalize on any tax breaks coming your way, and you're going to want to capitalize on those. And of course, not spend extra hours researching on your own. Time is money. Check out the complete TaxSlayer review at thecollegeinvestor.com to find out more. And we have reviews on all kinds of different tax software at thecollegeinvestor.com as well. Thanks so much for stopping by today. We'll talk to you again real soon.